Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Happy Friday. Welcome to Pre-Market Prep. Spencer Israel, Joel Elconin, and Dennis Dick with you this morning. We're going to talk about Tesla. We're going to talk about Mudrick Capital / Tops. We're going to talk about Foot Locker. We're going to talk about John Deere. For those of you who are stressing about this Tesla humanoid robot, don't worry. I have a strategy. I know how to defeat it in battle should that ever come up. I've been thinking about this all night. Our guest today, Tommy Lackey, a longtime friend of the show, will be on with us. He's from Relativity Capital Partners. He'll be on at 8:35. I'll have Peter Tuchman, the Einstein of Wall Street, on at 9. So a lot to get to on our show. Do me a solid and smash that like button, please, and thank you. And now I will bring it to Joel. And Joel, did we buy the dip this morning?
We forgot something, Spencer.
Well, the thing, the extravaganza.
Yeah, you're not going to play the video again?
I can play the video again, sure.
Yeah, why not?
You want me to play it right now?
Get to see our ugly mugs.
All right, I'll play it right now. Yeah, that was actually the wrong version. There's a new version with a slight. There's a slight change. The slightest of changes. But
what's the slight change? I didn't notice.
I'm not even going to point it out to you because if you point out,
Dennis, have you come up with a dance yet for that? That's different than
the Bushwhackers.
S&P futures traded down 16 handles, 85.50. Couldn't hold the close. We had a dip overnight. We're just chopping around a little bit below mid-range. The question is, are we going to, for the last several weeks, we've ended the week on the high or the low? Well, mostly the high. Are we going to end up on the high for the week? I don't think so. We'd have to have a 90-point rally. Are we going to end on the low? Sure doesn't feel like it. That's 40 handles away if you use that pre-market low from yesterday. Crude headed towards $60 a barrel. That's down 89 cents, 62.81. Trying to hold the low from Thursday's session. Gold stuck just under 1,800, up 420, 87.30. Silver in the red by a nickel, 23.18. Bitcoin just hanging out under 47K, up a couple $100. And Ethereum, good support at 3,000 in the futures. That's up $64.25. So here we are, another Friday in August. Triple D, how you doing?
Doing good. I've
Good.
got this question multiple times, so just before we go away from tomorrow's pre-market prep extravaganza, this will be taped for the paid subscribers, correct?
Yes, sir.
And they can get a copy of it?
They will have access to it if you are a paid subscriber.
Okay.
If you
so
pay
people
for
are
it.
asking because a lot of people are busy Saturday morning in the
Yes.
summer. So if you do sign up, you will get a copy. You can get a copy of the entire 3 hour plus presentation. It's scheduled for 3 hours, but we know we're probably going a little bit over time with the Q&A. So
do you know
we got
I've
45 minutes of Q&A scheduled. I'd imagine that's going to go over time. So
here's my agenda that we're going to go over at 10. And I went over it with Mitch and Rob yesterday. And I already know where we're going to have to make adjustments. So, yeah, I already.
Are you cutting my time?
We'll talk about it at 10. I don't want.
I have a question. Will the presentation be available as an NFT after the fact?
Ooh, sell it as an NFT. I don't think so.
No.
We'll leave that up to Mitch. Mitch
right.
is our NFT.
Speaking of NFTs,
let's talk. Let's take it to the markets.
Yeah. So I confess, I actually was a little bit ignorant this morning because Joel and I were on the air yesterday when the headline came out that MLB and Topps were ending their relationship after 70 years. And I came in this morning and I saw Muds was down again. And I thought, wow, sometimes you just this is what I was going to say. Sometimes you just never know if the news is not priced in yet. Wow, they're still hitting it on the same headline. Boy, no, was I wrong? There was another headline. I didn't even know it.
What was the other headline?
The Spac merger has been canceled. That was the other headline this morning. Mudrick Capital and Topps are getting
divorced.
They're not getting divorced because they were never married. But their annulment, not the right word either. They're part of it. They canceled the wedding. Basically, they canceled the wedding. The wedding is off.
Holy, yeah, it's right there. Termination of the merger. Well, you know what Mudrick Capital says. You don't got the baseball cards, Topps.
Right.
We're out.
Right.
We're out.
Right.
I can't blame them. Smart move. So I actually liked this stock at one time because I liked the concept of the NFTs. I had sold it because it just got way overdone when it went up to 18.19. I actually rebought this in my long-term portfolio 3 days ago at $10.09. I think I ended up paying. I almost got the low of the day, 10.05, because I simply thought, one, that it would bounce off the 10. Two, I still like the concept of the Topps NFTs, Topps baseball cards. I'm a hockey card, baseball card fan. So, I've got a little, obviously, that liking for that. So I bought that. And the last 2 days was really good. I was like, oh, that was a great one. The thing was up over 11. I was doing well in it. And that headline broke yesterday, about 20 minutes before the close. And I turned around and quickly got into my long-term account and sold it. I'm like, no way. I'm like, they lost Major League Baseball? That's no good. So I didn't get out at 11. I didn't get out. I was way too slow. I saw the headline. And then I was like trying to quickly, because I'm trading stocks, trying to quickly get to my computer. And, I got significantly lower than $11. But I'm like, you got to sell it. You just take your lumps. And actually, I ended up making a little bit of money because, like I said, about a 10.07, I sold it higher than that. But you got to sell on the headline. I mean, losing Major League Baseball is huge. So obviously now Mudrick Capital looks at it and says, we're not buying Topps.
Right.
We're not merging with Topps. They don't have the baseball cards. So they don't have Major League Baseball. So good move for them, because now it becomes pre-SPAC again, and that will hold the support, because I wouldn't be surprised if this was still going through with the merger, if this would have actually significantly taken out the 10 and start trading below it. But now that you're pre-merger, you get your $10 back if they can't find a target. So it's unlikely to go way down. So I think it's a good call by Mudrick. Get out, lose MLB. I mean, they tossed with them for 70 years, and they lost them. So who did they lose them to?
Fanatics, which is actually a company that the MLB has a stake in.
That was quick scrambling around by Mudrick, but I think it's a good move. They might as well find a different target, because you lose the MLB. That's not good for Topps.
Well, Mudrick is probably doing what the rest of us are doing. They looked around. They're like, Topps. What does Topps do if not baseball cards? Oh.
Yeah, you don't have baseball, and they want to do NFTs. Obviously, you're not gonna be able to do the baseball NFTs then.
Supposedly yes, but
Cubs still going to be able to do that.
supposedly,
I don't know
but
if you lost the Major League Baseball contract. I don't know why they would allow you to do virtual cards.
but it's like the thing we associate it with, right? It's like
100%.
right. So
How long has it been since I told my my Mickey Mantle rookie card story and Hank Aaron when he was still with the Milwaukee Braves?
Oh,
How long
goodness,
has it
I've
been?
never heard this story, so you better tell it.
probably been a while.
Tell me about your
Yeah,
Mickey Mantle
today's the
rookie
day.
card story.
Joel, today's
the day.
Today's the day.
It's baseball
good.
card stories.
Real quick. I'll give you the quick version. Good buddy in Monroe, growing up, his name was Paul Dunbar, and he had some older brothers, quite a bit older. And I was over his house one day, and we're doing what kids do, and he gets in his brother's baseball cards, and he pulls out this like Mickey Mantle like rookie card and a Hank Aaron card when he was still with the Braves.
What year was this?
I had to be less than 10 years old.
So like 1940 something.
Yes. Yeah. So I would say
Mickey Mantle literally was a rookie back then. So this is like this is going like real time. Hey, I just went to the corner store and I got the Mickey Mantle rookie card. This guy's a pretty good player. I think he's going to be pretty good.
Okay,
Anyway.
you guys are making this a long story. And
It's funny though. You got to give it color. We're giving it color. Taking
Okay.
Joel back to the 1940s.
Okay. So my buddy, he goes, "Do you want the cards?" I'm like, "Yeah." Okay. So I go, "Won't your brother mind?" Brian was his brother's name. And he said, no. He won't mind. So he gave me the cards. And I had them. And I had them for years and years and years and years.
It's going to end badly, isn't it?
And my sister's friend was married to his brother. And word got back to him. This may be 10, 15 years later that I had the cards. And Brian was he was livid. He called me up. I go, "I'll give you back the cards. They're not my cards. They're your cards. You had them." So when he was in town, he came over to my house and I gave him back the cards.
What year was this you were giving back the cards?
I probably gave them back in 85 or 86.
Oh, wow.
So I kept them for like 13, 14 years.
So you had the Mickey Mantle rookie card. What's a
Yes.
Good on you. Joel did the right thing.
I did the right thing.
What's a Mickey Mantle? Mitch in the background.
I have no idea.
I would have ran away with those
What's a Mickey Mantle rookie card worth?
Let's find out.
Put it this way, I'd be in the Bahamas right now.
Oh, wait a minute. One just sold in January for $5.2 million.
Well, those are going to be the tens though, like the mint. I'm assuming Joel's cards, if he was playing with them or looking at them, they probably weren't top condition.
I don't think they were top condition, but yeah. So that's
regardless. Mickey Mantle rookie card be worth some money, Joel.
A lot of money. I know.
Wasn't one of your better trades.
You got to do the right trade. You got to do the right thing.
You got to do the right thing. They weren't your cards. They weren't your cards.
So the right thing here with regards to Mudrick, MUDS, right? If we can bring it back to that, is now they're on the open market again. They're looking for a meet.
Yeah. So now it goes pre-SPAC. And these pre-SPAC, there's a bazillion of these stocks trading just under the 10 par value. So it's right where it wants to be. I would imagine it's going to trade now between $9.75 and $10 until they find another target. And then if they like the target, they get the lift. If they don't like the target, they sometimes get a dip. I've still in a few pre-SPACs, pre-target, not pre-merger, but actually pre-target. So we're back to pre-target. So I don't think you're going to get rocked here. You can talk about MUDS with the toss, but they've canceled the merger now, which was a good call because I don't know what you got without MLB, man.
Pre-market low just got under 920, 915. Looks like we got a nice bounce there. Consolidating here. $10 is the number. You guys are the SPAC man. I don't have any opinion.
I'm definitely not. It's Mitch's. But let's take this over. Let's take this over to the broad market because, we look here and I want to have a conversation here. Joel, I threw this at you in the pre-market. I threw it at my Twitter followers last night, but we look at the S&P trading roughly 2% off the all-time high. And everybody on CNBC last night and everybody on CNBC for the last few weeks, it feels like, has been calling for a market correction. But if you stop looking at the S&P and the Dow and the Qs, which are obviously very heavily weighted, some of the mega caps, and you look at the broad market overall, we've had a correction. The IWM, believe it or not, which is your small caps, is down 10% from the highs right now. Twitter follower of mine pointing out the IWO, which is the growth, Russell 2000 is down 16% from the all-time high. ARKK, which we use for the super growth, nosebleed valuation stocks, is down 28% from the highs. These are ETFs. These aren't individual stocks. And then you start just going to individual stocks and you look at the value stocks and like, oh, a lot of those are off the highs. You're actually, if you get outside the mega caps and the S&P, this is where I'm bringing it back to. The S&P is now 22.5%. Those 5 top stocks, which are Apple, Microsoft, Google, Amazon, and Facebook, make up 22.5% of the index. That means the other 495 stocks make up the other 3/4. Roughly a quarter of the index is 5 stocks. And we know Microsoft making new all-time highs yesterday. Apple, right there near all-time highs. Facebook is not far from all-time highs. Google is not far from all-time highs. Amazon, the only laggard because they disappoint after the earnings report and they haven't really been able to catch a bid. But if we keep looking, and the market, everybody keeps calling for a correction, we've kind of had one in the broad market. So at what point in time do we stop using the S&P to gauge the overall market? Because the overall market, it looks a lot different than what the S&P looks like. Your average stock is
I really can't argue with you. I mean, Dennis, you and I have been, S&P centric, going back for a long time. Yeah. And there was a point where the top 10 stocks made up 25% of the index. And
that's top 5.
Go back to the old days, Exxon, Mobil, General Electric, IBM. Who are some of those old codgers in there?
I'll tell
Chase Manhattan Bank is gone in and out.
How far back you want to go, but like ExxonMobil, Pfizer, Shell, Merck. It was a lot of healthcare, right?
Yeah.
Hathaway, obviously, right? Bristol Myers, Coke, Intel.
And the consumer staples are holding up this market too. We give a lot of love to, the mega caps. But what do the consumer staples and the mega caps have in common? Is that they are seen as safety trades. When the market starts getting, you actually see people buying Apple and Microsoft and moving out of, the higher beta names because they're seen as a little bit more safe relative to the growth tech. And, if you look right now, XLP is sitting right near all-time highs. So it's been a conservative market for a while. When I see XLP making new highs, I don't think of a rip-roaring bull market. I think, money is playing it on the safe side. Don't you, Joel? Like XLU as well. You can throw that in the same thing. Those are safety trades, and XLU is right near all-time highs as well. Those are safety trades. This market has been playing it safe and been playing it safe for a while. At what point in time, do we just say that, this is just kind of bogus that, the overall market is, they're saying is at all-time highs when you look at a lot of other broad indices that are significantly off all-time highs?
Can't argue with you. I mean, it's technology too. If you break down the components, Berkshire, hops in there in the top 10. But
a lot of Apple and Coke.
Yep. Tesla made a move in there. Nvidia made a move into the top 10. I mean, technology. I mean, that's what let us out of off the lows in March. I mean, we're just based a lot of technology, and technology, I think, got an extra bump up because of the pandemic. Technology was important before, and then, the way we needed to communicate and work, it became even more important. So it's just, it is. I agree. And I don't know what I would use, Dennis. I can't, that's my field. That's the market. That is the most liquid, of the indexes, and, really determines a lot of the price action in the other indexes, at least in my opinion.
I've actually done, and obviously we're going to talk a lot about this on Saturday, but I've actually moved to using a little more of the IWM
Yeah, you said that.
in my hedging vehicles. And I've always, hedged with SPY. And, I've hedged tech stocks with Qs. I've hedged the overall market exposure with SPY. And I've been using a little bit more IWM because I've realized that the SPY hedges are not working. What it is just a lower beta version of the overall market now. So I would say the S&P is not what was really indicative of the overall market now. It's a lower beta version of it. It's a conservative version of it. I love being invested in SPY. It's the biggest holding in my long-term portfolio, I believe. And I love being long just SPY because, one, you do get market appreciation, and two, it's a more conservative way to invest. So if you're a growth investor, SPY is not your vehicle. But if you're getting up there, like I'm mid-age and Joel's, obviously a little bit older than that, we'll tease him a little bit more. SPY is a great vehicle because it's not nearly as volatile, but it is a lower beta version, I would say, of the overall market. So where people are saying the S&P is the overall market, I would disagree with that now. I think the S&P is very heavily weighted conservative stocks. So I think it's good, from a long-term perspective. I'm not selling my SPY. I'm just starting to use different vehicles to hedge with, because when I'm long a bunch of, different stocks, like even value or growth, higher beta names, I've got to just short more S&P against those longs, or two, you use the IWM and it works a little bit better. So.
And the way you're noticing it is, if you're long these other stocks and you're short the S&P as the hedge, and then the S&P is just holding in there, not really going down, then you see it apparently. So well, we'll see what changes in it. I mean, I can't, they bring new companies in and out, but I used to say, who cares about the other 490? I guess I can say, who cares about the other 495? But it's certainly a good indicator. Like when you looked at the market yesterday, opening near the lows, even, you didn't know it was opening near the lows, but if you look at these top components, I mean, Apple made a low early in the session. Microsoft opened up right near its low. Amazon's having some trouble here, Dennis. Another new low on the move. We talked about their move yesterday. Street doesn't like that.
It's out of favor right now.
Yeah.
You are going to come in, and I think you've come far enough to challenge the major support of 3,000 one more time. Why not?
I agree.
I mean, we touched this 3,000 level, half a dozen times at least in the last year. Why not touch it one more time? So I think if you're buying it here, I think you're going to get another shot at 3,000. I own Amazon long-term portfolio. It's a big position for me, just like all these other stocks. I own Apple. I own Microsoft. I own SPY. My overall portfolio, long-term, the long-term stuff, not the trading stuff, is probably very linked with SPY because it's a little more conservative. But, my trading portfolio, I love trading, a little bit of the high flyers. I like trading the higher beta names. If you're just using SPY as your hedge, it's not working, the SPY hedge as of late. It works in your favor on the days that you're just light hedged. So you almost have to go like twice as hard on SPY to really make up a hedge. But let's even take this to the emerging markets, because what is going on with the Chinese stocks? They just get annihilated every single day. Alibaba, was this capitulation yesterday?
No.
Like, I'm long, so I bought Alibaba. Here's the long-term story and maybe a fight against long-term investing. But I bought the Alibaba at $151 5 years ago. In that time, it doubled. It went up to over $319. We know I sold a piece. A lot of people gave me hell when I sold the first piece of that. I can't remember when I sold it. And then I bought some more, but then I sold all that too. So, I'm glad I sold a piece because I've taken out the majority of my money that I had invested in Alibaba, but I held on to a chunk of it. And I shouldn't have held on to a chunk of it because it has now come all the way back down to where I bought this thing 5 years ago. I mean, this company is trading very low, valuation. But when you have a, country that is potentially limiting profits that companies can make, that becomes, a game changer for investing in those countries and investing in the companies of those countries. So I don't even know what to say. I get this question every single day, probably multiple times a day. Are you buying Alibaba? Do you like Alibaba? I own a small piece of Alibaba. Do I want to reload my entire position that I bought 5 years ago, I believe at 151, maybe it was 4 years ago at 151? Kind of do. But then I'm scared. I'm scared of the political risk. And, I look at stocks like Baidu and I look at everything like EEM, which we've talked about, a lot, has gone nowhere for a decade. China has been, FXI has gone nowhere for a decade as well. And FXI is significantly off the highs here that we just made back in February. We're talking 54 down to 38. You're talking about, a 30% correction here in China directly. I mean, it has been a horrible place to be an investor. How does that change when political risk has risen?
It doesn't.
I know. So it's tough. So I'm very underweight China. I have a couple of emerging markets funds and I own a little bit of Alibaba directly. I'd like to get more weighted, just from an exposure perspective. But then I continue to look at this and think, why? This has been the worst place to be, and one of the worst places to be in the last decade. And it doesn't look like the political environment over there is getting better.
The more stock like Baba falls every day or every week, the more people are going to come in and say, "Oh, I should just take a flyer on this." I mean, can it keep? How much more can it keep going down? But don't fall into that. That's a logical fallacy. Don't fall into that trap, right? I mean, why do you got to be the hero? Why not just wait? Why not just wait it out? Until we get some clarity.
Yeah,
because we don't know.
Why catch the falling knife? Why be the first to catch the falling knife?
You just saw it fall 60%. Who's to say it couldn't fall another?
Is that what it's down now? It's 60% from the high.
Is that it? I was guessing.
I think you're roughly right. Yeah,
right.
It got over
319 to
300.
160, cut in half, 50%.
All right,
Yeah.
so we'll call it 50%.
2-for-1 stock split, but you didn't get any extra shares.
Yeah, well, yeah. I mean, who's to say it couldn't happen again? We just saw it happen, right?
Oh, I know.
So I mean, yeah. For the last 15 years, the story has been this is a demographics play. China is going to be, they got more people. They're going to be playing catch up to the U.S. in terms of everything, the economy, technology, growth, et cetera, et cetera, et cetera. And what happened is they built those companies, right? They built Alibaba and Tencent and Baidu and JD and now we have a new wrinkle that we are only just now learning about in the last couple of months, last 6 months maybe. Whenever the Jack Ma thing, I don't even remember when that started. So my point is, why play the game when you don't know the rules? Why not just wait? Why not just sit it out? That's my point here.
And can you trust the numbers? Other people are saying in the chat too. I mean, Baidu.
That's always been a question.
That's always been a question. Baidu. What an incredible run. They were going to be the EV play.
Yeah,
Remember, they were going to be an EV story, and we had this ridiculous run. And this is why I don't chase stocks, people. We're getting a lot of hard lessons here. December, $142. Literally 3 months later in February, this hit $354 a share. So it went up about 150% in a matter of 3 months. What has it done since? It has given the entire rally back and is now below the point of breakout, which was 150. And now it looks like Baidu was challenging $100 for the longest time. If you go back to the long-term chart, Baidu hung around $100. It felt like for a good year.
I remember, yeah. Yep.
And even back to 2015 when you had the flash crash low. Remember that flash crash back in August of 2015? They kissed that 100 right on the spot. It's had memory at that price before. I mean, we're $137. Is Baidu going back to 100? I don't know the answer to that question. Is Baidu oversold? Absolutely. All these Chinese stocks are oversold and are due for a bounce. But they think, okay, well, maybe this is going to be the bounce. And then they have a day like yesterday, and it's like, holy, the people who are trying to catch that falling knife continue to get punished. I don't want to be one of those people.
I don't want to get all philosophical on this and get a long discussion.
Socrates.
But I mean, they have a
China
plan. China has a plan. They have a plan. And it's not like get reelected in 2 years or 4 years, right? They got like a 25-year plan, a 50-year plan, and they, and this is part of the implementation of it. So let's move on.
Yeah.
Let's
okay.
not too much.
Wait, can I
scared talk China.
Wait, can we
they
go
shut
back
the show down before?
Wait, can we go back to the Russell thing for a
put that line in my backyard? Remember when I called you about that?
Joe's like, China's watching us.
wait, can we go back to the Russell thing for a second?
Yes.
I just saw this stat on Twitter. This was from Steve Depp. He's a CMT. So this is some stats on the IWM. Sort of let you know how uncertain this time is right now.
Sure.
We are currently in the IWM in the midst of a 6-day losing streak. So if you look at all the 6-day losing streaks that leave the index still within 10% of the all-time highs. So are you with me?
Yeah.
10% off the all-time highs.
Kind of.
6-day losing streak. It's only happened 7 times in history, and of those 7 times, some of them are in the midst of massive. Well, one of them is right now, right? And you get other times where it's been in the midst of massive bull runs. 2014, and other times where it's been in the midst of not great periods like January of 05. So it's really, there's not a lot of historical precedence here in terms of the IWM in the having a 6-day losing streak while still being within 10% of the all-time high, which it is, to be clear. So we don't really know where we there's not a lot of historical precedent for this situation in the IWM. I will note with regards to the SPY that the S&P committee, they rebalance the SPY. It's 4 times a year. The next one is in September. I don't know. Are they going to have to come out and fundamentally change how
because it's market cap weighted. They would have to, they'd have to like say we're not going to be a market cap weighted index anymore. It's not S&P's fault that there's 5 companies that have huge market caps.
It's not their fault. No,
it's not their fault. They're a market cap weighted index. We liked it better than the price weighted index because the Dow Jones is price weighted. The higher the stock price, the more impact it has on the index. A market weighted index, the higher the market cap, the higher percentage it is of the index. So, I mean, it's, the way it's structured is doing exactly what it is supposed to do. IWM is more equally weighted, and it's got 2,000 stocks in there. So you get a feel for, what is really happening with the average stock. And the average stock is not sitting near all-time highs. I know, like, I look at my long-term portfolio, I'm doing great in my Microsoft, I'm doing great in my Apple, I'm doing great in my SPY. But I got some little dogs in there, and Fisker, obviously one of them now. I mean, there are some growth names that have been absolutely hit hard. My General Motors, which, I sold a piece of, but was way up in at one time. Thank goodness I sold the options too, has come all the way back down to where I originally bought it back almost a year ago.
Yeah.
So Ford too, I mean, has come off significantly. I haven't sold any Ford. So, there is like significant corrections, not only in growth names, but in value names as well.
Here's another good stat. This is also from Steve Depp. There, so the Russell has declined 5 straight days of at least 0.75%. That's that's happened. We've fallen at least 0.75% 5 days in a row. That has happened 6 other times. Those 6 times: September 2001, January of 08, October of 08, February of 09. At the same time, though, August 2015, right? We had the flash crash then, and then we just right to the moon.
Yeah.
And then last year, right? So, again, not a lot of historical precedence for the Russell here. It's sort of go either way. I don't know.
This would be too bad we couldn't rake Rob up this early, but he has stats on this. The odds,
stock odds.
And if you can, it will turn. I'll cover that at 10:30 with him, but we'll see. I mean, the way you guys are talking, old Barry, I'm looking at this chart. This thing had an incredible run, over doubled off the March low, and to me, I'm not sure people holding the IWM, don't want to hear this, but I see major support at like 207. We've been hanging there. Haven't got down to that level yet. We're at 212. So it's just a big run consolidation. You could be in one of these phases here for like a year. Look at how much it moved in a tight range. So, this has been, 3-6 months. So I just have to go out to the longer term chart, look at the major monthly support at 207 and say, hey, comes down to 207, buyer. If it doesn't hold that, then we got some major problems. But it is a big losing streak. There's no doubt about that.
It's hard to make money calling this market right now. I mean, you have individual setups, and that's what I swing at always, but just calling what the IWM is going to do and predict what it's going to do today or tomorrow, it's easier to just flip a coin because, we've had 6 days losing days in a row. We're going to get nine times, maybe. Or are we going to turn around? Are we oversold in the short term? 6 days in a row. You don't see a lot of times you get to go down 1%. It's been better than 1% a few of these days. 6 days in a row. We are coming to a major support level in the IWM, which was the low from July at 209.05. Do we bounce there? Odds are you would probably think so, but this market, anything can happen. So, I mean, this is just a weird market. It's also a market that very much, in the growth names and some of the meme stock names, feels like, we're in the midst of a major correction, like 2000 type correction, because you look at stocks like, RIDE, and you look at where it was $32 a share back in February. It's now $4. is that, like that looks like it's just on the death march. And then you go on, there's so many names that look similar to that. I mean, you can look at QS, which is another one, QuantumScape, a darling back in January, had $122. It's 19. I mean, these stocks are down 80-90% from the highs, which again tells you just buying, on a concept, just buying with valuation out the window doesn't work in the longer term. It doesn't work well at all. And, people are learning that the hard way, that they can't just pay anything, 50 times sales or 80 times sales. And some stocks are still holding up like that. So it's not all stocks. But this EV story that was so hot that, every EV stock was just going to the moon, obviously didn't happen now. And a lot of them have come down significantly. There's still going to be some winners that emerge from this. And it's kind of hard to figure out which ones. But I think of all these EV SPACs, I don't know if there's 50 of them out there. I feel like there's 50 of them out there. Maybe there's even more. Mitch might be able to talk more to that. But I feel like 90% of these things are likely, not coming back. And there's going to be the 5 to 10% that are going to, emerge as winners. I'm hoping Fisker is going to be one of them. I've touched, obviously on Fisker. I have a small position in that one. But again, speculative capital only. Would I take half my portfolio and put it on Fisker? No. Diversification. And, when you're doing speculative bets, I even go lighter. So it's such a tough market, where we sit here and we see the indexes at all-time high, and there's so many small stories, that just, it's not the case. I mean, Wish, I get a question on this every single day. This is a very talked about stock in social media. This stock is $6 now. It was 30 back in February, $32. It's $6. I mean, this doesn't look like it wants to come back anytime soon, Joel. All these charts, they're oversold and they can bounce, but a bounce on a $6 stock is a bounce to 7 or 8. Is Wish going back to 14? Is Ride going back to 14? I highly doubt it.
This is a really good day to have Tommy Lackey on this show, because we're talking about different areas of the market and how it seems like most of the market is down. Well, no, not seems like it is. Like most of the market is down, with the exception of the mega caps. And Tommy Lackey looks at the market from a relative strength and weakness point of view, different indexes and different sectors. So let's bring Tommy on now. Tommy Lackey, good morning. How are we doing?
Hey guys, how are y'all? Doing well.
Great to see you. Great to hear from you. I know you said, but just before, you thought we were making some good points earlier with regards to the Russell versus the S&P, and you have thoughts. So what are your thoughts?
Well, I think this is one of the biggest things a lot of people miss in these markets in general, is that, again, the mega caps have separated from the small caps as far as size on a level we haven't seen most likely in our lifetimes.
Wow.
Maybe it happened before, but I've never seen it in 25 or 30 years of studying markets. And so what's happening is that, like you said, the S&P, the NASDAQ 100, those kind of things are moving off of very small percentage of names, but yet very high markets. I took a look after y'all were talking about that earlier at the SPY internals. Let me see if I can share this real quick. How do I do it?
There's that share screen button on the bottom.
Yeah, I got that. I'm just trying to figure out how I choose which box or whatever.
Can't help you there.
Okay, we'll see what it does. Oh, dear God. Okay, well, we're going to try this then.
All right, let's see. Let's see what we end up with.
It's going to be bad. Crap. Okay. Window. Here we go. Now I'm getting in a better place. Sorry, guys. I was like looking at that, and you did not want to see a 50-inch screen. That's not going to be helpful at all. Let's do this one.
There we go. What do I see here? Can we see
this?
This
is off of ETF.com, and it's basically
the
S&P 500, and it's their breakdowns. Look how heavy technology is. It's 34% of it.
And that doesn't even tell the whole story, because
technically
speaking, Amazon is not in the technology sector.
That's what I'm saying. It's in consumer cyclicals, which is the next one. So you add probably another 6 or 7 or 8% there. So when you look at that, and then we flip over to VTI, which is the total market index, same thing, 32%, 14% cyclicals. And then you look at the IWM, which y'all were talking about just a minute ago. Look at its breakdown. 20% financials, 19 healthcare, 14 technology, 13 cyclicals. Much better spread of the overall market. However, it's one of those scenarios that you got to be very conscious about when it's running and when it's not. One of the charts I post every single day is what I call a triple play chart, which is basically sets those three by each other, the IWM, the QQQ, and the SPY. And I look at these every day right next to each other to look kind of how they're acting for that very reason. You've got to be able to separate those two, because back in 13 and 14, if you were in the market back then, it felt like nothing was moving anywhere. Everything was moving sideways, yet there was a ton of volatility in the middle. And so there were opportunities to make money on more of a swing trading basis, but a good friend of mine who was a trend trader was just getting torn to pieces. And so you got to be conscious about the separation in those. And right now, the large cap to small cap separation is huge. I'm going to flip to another screen, or no, sorry, I'm going to go down the screen. And we're going to take a look at basically a table that I do, which basically ranks all of the large cap, small cap, mid cap, growth, and value. And interestingly enough, y'all been talking about value, coming back, but it just hasn't done that. Growth has still stayed in the leadership position, other than small cap growth, which has just gone with the size situation. So in hedging and things like that, it does get much more difficult now, because most people are so used to using the SPYs or the Qs or something like that. Qs because of the volatility, but these days because of those few holdings that are really holding things up and really taking the majority of the flows when we have these lopsided days, as I would call them. But if you look right here, and we've talked a lot about bad breath, this chart right here, that didn't work. Sorry, guys. Let's try that again. This chart right here on the left side is the breadth of all of my universe, which is 3,000 stocks. And it's been falling most of the summer. There's no doubt. The situation, though, is we still have 50% of them over the 200-day moving average, even after as far as we've come. So, Dennis, I think you may have made a good point, is that the question we have right now is, are we really going to break down here in the small caps, or has the majority of the market already corrected?
That's what I wonder too.
Can we flip the opposite side and have to where basically your mega caps take their rest and their corrections while the rest of the market starts to participate and perform, and we have that kind of rotation versus a sector-based rotation? And we don't know right now, because as we said, the IWM is sitting right on support, and it's kind of in a make it or break it scenario. Now, my feeling with these markets is there's a good chance we'll overthrow that 207 that he was talking about, just to run some stops.
Yeah.
And as I put in a comment this morning, the question is, do we just run stops, or just keep running? And that's what we just have to figure out, whether buyers are going to step in at that point or not. And a lot of these names, they have corrected very strong, and you've got really good companies now that are down 15, 18, 20%.
Look at, and you're saying really good companies. Do you have any on your radar, like companies that have had a significant correction? Because people are always waiting for a correction. They're like, oh, one day the S&P will pull back. But we've had the correction. There is stocks that you have come off the highs, and maybe some good companies too.
Okay, I think it depends on how you have to look at it. You're going to have to give me just a second here as far as that scenario, because honestly, we're in a situation. Sorry, I'm on the wrong page. I don't mean to be screwing with y'all as far as the screen. Honestly, we're in a situation now to where, in my opinion, it depends on what you're looking at coming out of here. Are you looking for something that's corrected a lot, or are you looking for the things that held up strong with strength during the pullback? Obviously, financials, some of the REITs, some things like that have been holding up and starting to perform decently. But again, we got to question whether those are just because everything's correcting, or whether those are actually our next set of outperformance. And with TLT being a top performer over the last month, I think it's hard to consider financials until that rolls back over. So I think you have to look at the scenario of the pullbacks, like you said. And if we go over here to technology, sorry for that page, we can see that actually in overall view, the technology sector is getting pretty heavily oversold pretty quickly. Sorry, that takes me a minute to load that, guys. But this is an equal weight of all the technology names that are in my universe. It's an equal weight, sector-based. And basically, you can see right here, RSI is already down below 40. And we see here another measure that I use. It's from Andrew Cardwell. It's a complement to RSI. It's down in -20 area. And, we haven't seen this kind of pullback in technology since last October, November.
That's incredible that when you're looking at it from your, perspective here and your indicators that you're seeing already a significant pullback, and you look at the Qs and they're sitting 1-2% off the highs. People are like waiting for the correction. But like we've been saying, the correction has happened in the majority of stocks.
Though, here's something to notice here, though. And this is where I'm saying about technology is it's happened to some extent in that level. But look at the actual equal weight scenario. We still really are in a sideways move. And
Right.
I think your point is made in what you talked about the meme stocks earlier, is that basically everybody is so focused on them, even if they are having a 2000 type correction, pullback, rollover, whatever you call it, they're such a small part of the market. They're not significant enough, yet they're getting all the attention.
Yeah.
And so that's why we are, again, it's like with any of the media these days, everything is juiced 24 hours a day. So now we're in our situation to where we have so much information, but not a whole lot of knowledge. And that's what we're getting caught into here when we get so focused on things like QS or Wish or any of those, when those might be 3, 4, 5% of your portfolio. But if you're still paying attention to stuff out there that are strong formers, example like financials have come back up. I mean, a lot of technology software has still been a great place to be if you find some of these guys turn, and some of them started turning last week in the software space. And you really got some nice looking turns in some of these things like Team and some of the others as their earnings came out. Of course, it's hard to play earnings until afterwards. But right here on the middle of my screen, you'll see that I have the 4 different subsectors that I follow in technology ranked, and software has been number 1 for quite a while. And if I click on this, it takes me to a page that basically loads that particular same thing, equal weight index of that particular chart. Now, again, I use RSI as my momentum-based scenario.
You consider that a lagging or leading indicator, just real quick?
Do I see what's the lagging or leading?
RSI.
Well, RSI, it depends on how you use it. You really can't use it as an overbought, oversold. You need to use it more as a trend following. To where basically if it's trending between 40 and 80, then it's in a bull range. It's usually in an uptrend. If it's trending between 60 and 20, it's in a downtrend. And that's really where RSI gets important. I apologize, guys. Hold on.
Kind of lost you, Tommy.
Oh, he's back. He's back.
But basically with that scenario, I use it as a trend following. You can see these green lines on here. So right now it's still in a bull range, but the fact is we need to get some bounce here at this 40 very quickly. The fact that this is negative, that's really one of my shorter term indicators that I run with this. So we're oversold down here and we're right near the bull range. So I think we got a good chance of bouncing here. Whether it holds it or not, we'll have to see. But technology has been a leader, and yet a lot of these names have already and have pulled back. You were asking me if I can go through some names. Well, since we're looking at stuff that's pulled back, let's take a look at things that have dropped the most. RS or relative strength points over the last 5 days, but yet still have a decent score, maybe here in the 70s. TTD would be one I would play with or see. This chart's going to be a little bit busy for you guys.
You're looking at a stock like TTD that's still clearly in an overall uptrend, so it's had some relative strength, but it has pulled back off those recent highs in the last couple of weeks.
Well, sure. I'm not necessarily looking to go to something that's, completely busted.
Yeah.
Right here in this market until I figure out which way the turn is going to be. Like you said earlier, I'm not exactly worried about getting the exact bottom. I can get close enough. Now, with this same idea of what you were just saying, I could certainly go down here to like this one, like Very, which has lost 66 relative strength points, and there was an 80 just recently. And there's one you got that's really gotten beat up. I mean, now you can quickly see that we're now down here in a position where the weekly chart is now down at its previous breakout point. It's got some support down here at about 1660. But it's a pretty ugly move from top to bottom this last 5 days. So for someone like Joel, you could look at those lows and maybe play a bounce from those lows or a break. One of the things that I used to do that I like to do and just don't as much anymore for time is I used to do what's called a look both ways play, which is taught by an old friend of mine, is basically I would take short. If I thought it was going to turn around eventually or the uptrend would resume, then I would take short-term puts and longer-term calls. So do kind of like a strangle or straddle, but adjust my timing and do it as more of a diagonal. And so something like this, if you really feel you get a bounce off that support, you go ahead and put some short-term puts below it just in case you're wrong, and then come out here for some longer-term calls if you believe in the story or whatever. Now, your background research has to be yours. This is just a technical view right here. But, that would be one if you're looking for something that really is getting beat up. Or another one down here is Fubo. There's been a lot of talk about it back and forth. Had pretty strong rankings before. It's come down, and now it's kind of sitting on this support. Again, I didn't look at these and do the technicals on them beforehand, so I'm seeing these as we're talking about them. But same thing here. It loses this 24, and you're easily down to the 21 zone. It holds this 24, and this is a pretty fast mover. And if you'll notice over here on the right side, the RSI is still officially in a bull range. It's never broken this 40 level on the way down. So, here again, that 24-ish, what's that, 2446, 2450 area is a really important area here to see if it can hold. And I see if it can hold over like a 30-minute or an hour time period. Again, in these markets, you have too many bots and too many market makers that like to run stops. So don't put it right on that level and expect it to hold. You got to have a little bit of leeway each side.
I just
won't see.
All right. There's a lot of good stuff here. Like I said, it's a great day to have Tommy on because this is how he looks at the
Well,
market.
he's showing the statistics behind what we can see happening, like in the overall market that, there's a lot of stocks that are beat up and, he's showing us some stats that, we have had a correction in a lot of stocks.
Look at this one on the right here. This is a fairly important chart as well. It's basically how many stocks in my universe are making new 10-day highs, 20-day highs, or 63-day highs, or lows. 10-day lows, 21-day lows, and 63-day lows. So basically the last 2 weeks, the last month, and the last quarter. And as you can see, if we back this chart out, we're already to levels other than if you have to take out, of course, last year's 2000 as somewhat of an anomaly, unless we think we're going back there. But if we look right here, even on the 63-day, we're getting down to points that every single time we've gotten down to this many new lows, we've been near a turn. Especially when you get down here to the 10-day lows, every single time we've gotten down to these this many 10-day lows, we're near a short-term turn. So that's a lockout level. We're there.
We're right there. So it's a tough market here. We're at the crossroads. We've had a correction on some stocks, obviously not on other names. Do you think like do you start nibbling here, or do you think there's a lot more pain ahead here? What do you think?
I think you have to start nibbling, but be nimble enough to get back out.
Okay.
Again, you've got to see some price action depending on what your time frame is. You can go down to intraday charts if you want to look, but it's got to look like it's doing something good somewhere. I mean, if you're a long-term trader, then fine, it's a daily or a weekly chart. If you're someone who's a swing trader, I go down to 15-minute charts and say, okay, it's got to start performing technically on a 15-minute, and then I'll look at it more seriously.
Yeah, that's the shortest time frame I look at.
You got to be smart enough to at least make sure at some point, at some level, it's trying to turn in your direction before you really get involved at a juncture like this. But I do believe there's so much sentiment, there's so much fanfare, there's so much everything about this is the big one again. Seems like we are and continue to be in the 1 foot out the door market. And as long as that stays, and as long as we have the Fed liquidity behind us that's there, I don't see these things being able to have major corrections. I see it being more rotational.
All right, Tommy Lackey, thanks a lot for joining us, man. Always great to talk to you.
Thanks, guys. You'll have a great weekend.
All right. We got to talk about Tesla here today.
Should I get Gordo and Gino on at the same time too, or would that be copying CNBC?
They copy us, so you can do it. It's allowed.
Okay.
Well,
Go ahead, Spats.
Here, if you don't know what I'm talking about, that's what I'm talking about right now. The Tesla
bot.
The Tesla bot.
Let me see it.
I don't really know what I was expecting last night with the AI event. In hindsight, I guess it was merely just a recruiting event for them. There was a lot of, nitty gritty about the technology, but this was the big thing that came of it. They will be building a prototype of the Tesla bot next year, and this is what it can do.
The main point on that whole page that I'm looking at right now, and this is the first time I'm seeing it, is the word friendly. That this is going to be friendly, and it's not going to be the cyborg that is going to, the Terminator style. But Spencer is challenging. He's challenging the friendly here. What happens if this Tesla bot, turns unfriendly?
So the key stat on this page is where it says speed. Okay, 5 miles per hour. If you can run 6 miles per hour,
that's pretty fast, though.
Right.
I don't know if I can run 6 miles an hour.
If you can, you should be fine. Okay, you will be okay if you can run 5 miles. Now, do we trust the numbers? I don't know, but that's what they say.
Oh, he'll give an upgrade, like he does to the Tesla. Now it can run at 7 miles an hour, and you're like, game changer. Can't outrun the Tesla bot. I'm in trouble. Are we going Terminator? Is this like full on like how you were saying you got a way to protect us if this thing gets ugly, Spencer?
Pull the plug.
Yeah, well, my main thing was you can run 6 miles an hour and outrun it.
So that's the
sort
trouble.
of. But the other thing that we know that Tesla's AI has had a problem with their full self drives. They've had a problem detecting the sun. They keep thinking that the sun is like a traffic light. So if you have a bright, I don't know, shine a light in its eyes, I don't know. That was my thing. My main thing was the speed. If you can run 6 miles an hour, you should be okay.
Joel, can you run 6 miles an hour?
How
long do you have to run 6 miles an hour for? We can all do it for a few minutes. Do we have to run 6 miles an hour indefinitely?
I don't know.
Like forever? Does that thing slow down and get tired? It probably don't get tired, Spencer.
Maybe
That's another problem too.
I
can run 6 miles an hour for a few minutes.
We need to call Will Smith. He dealt with this in the movie iRobot.
That's true too. Yes,
he will know exactly how.
Where is iRobot in all of this? It sounds like Tesla's eating iRobot's lunch here to a certain extent. I would have thought iRobot. This should be an iRobot product, not a Tesla product. Are they talking about mass producing this Tesla bot, and we're all going to have our friendly Tesla bot making us dinner and taking the garbage out and walking the dog and mowing the grass? Is this Tesla bot going to do this, or is this just, is this going to be a major source of revenue eventually for Tesla, or is this just kind of something cool?
I'm kind of with you, Patrick, in the chat. This is just a distraction. A
distraction from the fact that, that the stock trades with a valuation of all the other automotive companies combined.
Yep. Yeah.
It's trading at the highs of the pre-market session.
They like it. They like it. The only way to justify the Tesla valuation is for Tesla to expand into other businesses. There isn't enough money in just cars for Tesla to sustain this valuation long term. But if they start going in, and this is what Jason Rasnick argued for a long time and correctly argued, is that they're going to slowly be expanding into other stuff. So we start getting into iRobot type stuff, like the Tesla bot. Maybe this is a technology company, and maybe the people, maybe it is going to justify this valuation eventually. This kind of, this kind of product makes me think that, maybe Tesla is a technology company, not just a car company. So I think that's what he's trying to do.
Trading at the highs of the pre-market session. You had that big drop. You got back halfway. I'd like to see, I think if for Tesla today to get back, I think it would turn the tide on the sellers this week if you could take out that high from Wednesday that came in. I believe it's 695 and change, and get back over 700, close over 700 today. Then I'd say, hey, the technical damage was mitigated here. But I don't know. It just feels like we're going to get challenged. There are going to be some sellers, all those short-term buyers. They don't care if it goes to 710, 720, 730. They were scooping it off that 650 level that we gave. There's a nice trade. I don't know what kind of options are traded on this week, but overall, it ended. Well, we ended last week at 717, so a little bit of a haircut. To me, if it can take out that high, close back over 700, then be a big win for the Bulls.
Okay,
Couples.
we got the Tesla. I was afraid we weren't going to get there today. Spotify announced a buyback. T-Mobile
Yeah.
had a hack. We can talk about those. If you have a ticker, we
Mobile had another hack.
no. This is the one that was reported a few days
Okay.
ago. Yeah. Any tickers in chat that I'm seeing we want to cover real fast before Peter? Don't see any. iRobot. No, we just talked about that.
What about Foot Locker? You want to do Foot Locker real quick?
Shoot, yes, Foot Locker and Deere. Foot Locker earnings.
Retail earnings.
They were great. They were great.
Yep.
That's all you need to know. They were great.
You called this yesterday, the retail earnings turnaround. You were calling the turnaround story. Macy's open, Gap, and Go off. Spencer Israel here. Kohl's, same story, although it had a nice undercut where it really would have shook you out probably because it was up in the pre-market on the earnings, and they took this thing down hard, down over $2 the previous day, but then the key reversal and ripped it higher here. Brick and mortar is back, baby.
Let's take Foot Locker, Street. I'm not surprised. The Street leading the wrong way into this report made a new low for the move. Coming up here, we're currently trading, 58.75. We've got over 59. Do I got anything there for you? 59.30. Keep an eye on that, and then why not? Oh, there's a pair of highs there. 59.30, 59.31. Pre-market high right in that area. If not, boom, let's get up to 60, right? There's a gap to fill up in the 60 handle. But first things first, you're looking for more on this. Got to get follow through that pre-market high. All right, guys, S&Ps have just had one heck of a rally. TJ Mosley called it. He might be getting a steak dinner out of me. He thought we're going to close green on the session. We're only 3 ticks away from that. I'm going to hop off. Everyone, I really hope you join us tomorrow morning. It's going to be a great event. Been working hard putting it together. Going to do some fine-tuning with Triple D at 10 o'clock, so don't forget. And I'm going to hop over to premarketprep.com. We did a lot of good general talk today. We didn't get to cover a ton of symbols, so I'm going to hop over there. Please join me, and we'll see you guys all. Actually, I'm going to be on Neil's show today at 1:30.
You will be on Get Technical at 1:30.
Nice.
Yeah, that's going to be fun.
Get technical.
Yeah, it's going to have fun. I'm going to have some fun with you. Looking forward to that. So everyone, have a great day. We'll see you later on.
All right, let me bring on the Einstein of Wall Street, Peter Tuchman. He's dancing.
Let's get technical. It sounds like a Olivia Newton-John song from like the 70s. Let's get technical.
It does. I'll tell him that. How you doing, Peter?
I'm doing great, buddy. How are you? It's Friday.
It is Friday. What's the mood like? I guess the mood is good. I guess.
You know what? The mood is good. My mood is good. And I mean, every day for me, look, what really needs to be brought up, and I love listening to the guys who are on before me talking about individual names and the technicals and how, I will say it over and over and over again. Technical analysis is the gift, right? It's the tool that can get you through a week where you've seen the market do things that are counterintuitive, that are up and down, that are wild reactions to the Fed, to earnings and whatnot. Price action is the name of the game, guys. They were talking about the retail sector. Some guys beat and the stocks went right down to technical levels. We saw it with Macy's. We saw it with Home Depot and whatnot. And then you had the market. I'd love to talk about what happened on Wednesday with the Fed. But the mood, look, it's clearly the dog days of August. We've had 2 weeks off now of IPOs. I heard just now this morning that September is going to be just an absolute plethora of new IPOs coming. The stock that I think Roger Federer invested in, the sneaker company, Kickers 24, something, I don't remember it. But September will be vibrant with IPOs. For this week, I have to admit, for me, one of the great weeks, because when you have the volatility that you had this week and really mixed signals in so many different ways, these are opportunities if you're trading technicals. Otherwise, I'm sure there were people who went home on Wednesday and on Thursday and were really kind of disappointed looking at their P&L, and that's the wrap.
We were having a conversation today about the S&P 500 and the lack of breadth and the lack of reliability that in terms of how that relates to the overall market. And the S&P is making new highs every day, it seems like, and the overall market, most of the market is not, frankly. And questioning the reliability of the S&P 500 as a reliable indicator, right, for what is actually happening out there. Do you have thoughts on that?
You know what? I don't agree with you particularly. There's so many components to it. Obviously, they're 500. There's so many names within it. We trade about 378 of those names here in New York. And look, there are times when we saw it during the pandemic that the S&P was trading at record highs and all the stocks within it and the overall market was also trading at record highs. Obviously, we're seeing a bit of a rotation. That's what I think, besides what went on Wednesday, which I'd love to chat about, which is all about the FOMC and the mixed dissension coming out of that story. We are seeing sectors being traded that are, the pandemic stocks, the stay-at-home recovery stocks. Those things are going through, growing pains. Those things are going through consolidation. Those things are going through rotations. And when you see that, while the S&P is trading still at record highs, you kind of wonder, so it's not really representative of the overall market. It's only representative of the stocks within it. And so, yes, there are sectors that have gotten a little bit hurt on the attempt at recovery and then the pullback from recovery. It's clear that the numbers that we saw, or the sentiment coming out of the FOMC and then Goldman Sachs downgrading GDP, that the Delta variant, and I'm calling it the deviant, that's my new name for it, the deviant is affecting people's outlook on growth. That's the bottom line. And when that happens, you're going to see people rotate out of something into others. And I think that's sort of describing what you're talking about.
Okay. And with regards to the Fed and the FOMC and what the T word, right? It's not transitory now; it's tapering.
Correct.
Right.
Go ahead.
No, that's the word of the week. Oh, not even the word. I guess it's the word of like Wednesday and Tuesday.
Let's address Wednesday. It's one of the things. Those days are days that are really special for me because it comes out at 2:00 when we're about to get into our trade, and it can be fuel behind the fire of what the imbalances for the close are going to look like, or it can really just completely flex shit in the wrong way. So let's talk about what happened. There was a lot of it. A month and a half ago, Powell said you're going to have a lot of leeway and runway before I give any ideas about tapering. Then that whole narrative changed to about a week and a half ago, where the story about tapering, when they were interviewing individual Fed governors, said that, we're thinking about it. Things look okay here, and we may start to address this thing in September. And the market was going, really? So in the anticipation into Wednesday's meeting was that they're going to make some kind of an announcement about tapering, right? Well, the first thing out of the gate, the funny thing about the minutes, we have Fed Minute Wednesdays and we have Fed Announcement Wednesdays. So the Fed Minute Wednesdays are when they really go and they talk to all 12 governors, and the story sort of evolves or unfolds to the public through headlines, one governor at a time. So that kind of is where you saw the volatility. If everyone wants to go back to their chart of Wednesday, something happened around 2:00. Normally you get, at 3 minutes to, you get Fed announcement imminent, and then at 2:00, it just comes out of the gate. For some reason, and I'm not going to read too much into it, it took around till 2:02 before you saw the first headline come out. And the first headline to come out was no decision yet to be made on tapering. The market's reaction to that was a super positive one. The first spike was up. And as we see on Fed days, their spikes are usually up and down as people are trying to digest what the heck is going on. As the story started to unfold, the disconnect about each Fed governor's opinion, and there are 12 of them, started to trickle out. And they each had a different opinion. There was dissent amongst the ranks. Some people felt that the economy was strong. We should start tapering into that strength. And some people felt that the Delta variant was going to cause some outlook on growth questionability, and that it was not going to be as good as we thought. So as the story unfolded, we did see the S&P 500 fall off the cliff, close at the lows, because the message that they laid out by the end of their minutes was that, this variant is worse than we think. We have really no idea the effect it's going to have on the economy, but it could be worse. It is the wild card in the sauce here. And that obviously is what put that breakage in the support in the S&P 500. Let's see. Did it carry over for a couple of days? Not really. Yesterday we opened down and kind of rallied back. The market was weak. It was more of a consolidation type of a day. We're down here looking at a down 80 opening here. If the market really wanted to get busy selling over that news that the Delta variant was really going to have some clarity on affecting growth, we'd be down 500 points here. We're not, right? So there is a bid in the market. It's not down 2,000 or 3,000 points. It's kind of an inline bid, Spence. That's my gut.
So you're saying that all the hullabaloo on Wednesday was nothing real?
Well, no, I'm saying it was real, but it's how people interpret it. We've seen that the original COVID and the variant, though major as far as it's affecting people's lives, the reopening story, going back to school and whatnot, it may not be having as much effect on the marketplace. And the bottom line is, if it is in fact worse than we think, that means they will postpone the taper. That means the Federal Reserve will still be putting their pedal to the metal and pouring gas on this fire, and therefore we don't need to sell the market, right? The fear was that the taper would be fast-tracked because things were doing so well, and I think that would be, we've talked about it before, the only thing I think that could dislocate this rally at all would be an aggressive taper. So what we're seeing is, as this story unfolds all week about how bad the variant is, and it seems to be pretty bad in Alabama, in Florida, and as we try to reopen, that we're not going to taper. And as long as we're not going to taper, there's support and bid in the market.
In which market? In the S&P or in the Russell? Those are two very different markets.
You know where they are. Yes, of course they are. I think in the overall market, look, some people are looking for growth. Some people are looking at small caps that underperform. Some people are just trading the market per se.
Yeah.
Clearly, S&P as a vehicle here is outperforming a lot of these things, as is sort of the Dow. Look at, no matter what, we're still hovering this 35,000. We're kind of churning. Market's working on where to go from here. And I think it's a day-to-day unfolding story relative to the variant.
All right. Peter Tuchman is the Einstein of Wall Street. He also is the co-owner of Wall Street Global Trading Academy, the link to which is in the description of this video. Peter, always a pleasure to have you on. We'll talk again next week.
Thank you, Spencer. I wanted to say one thing to everybody, and I know we beat you up over it.
Yeah.
But technical analysis has really been a great opportunity. Knowing it this week has had great opportunities. Let's look at Alibaba, for instance, right? We've seen Myrna, Alibaba go into these RSIs above 80 and below 20, where you see overbought and oversold conditions. And even though the China story is an ugly one, there are amazing opportunities if you learn technical analysis in a market that's down 500, rallies back 300, goes down 400. There are opportunities, guys. So I wish you all the best. Happy trading.
All right. Thanks a lot, Peter. I'm going to hop off here in a couple of minutes. Today's going to be a pretty normal day. The reopening stock summit is over. So we've got live trading with Benzinga. It's going live at like 9:50 in about 4 minutes from now. I don't think I'll be on for the first hour, but I will be on later on in this show with Eric Bosch, who is the host of our 4 a.m. show, the Early Bird Show. And so Eric and I will hang out from 10:30. So the gangs, Junaid, Mitch, Ryan, and those guys are going to hang out with you from 9:15 till about 10:30. 10:30, I'll hop on with Eric. We got Spac's Attack. I think Chris is out sick today, but we're still going to do Spac's Attack. We got the Power Hour today. Get Technical, which Joel will be on. If you want a midday dose of Joel, 1:30 Eastern Time. Moon or Bust is back today at 2 o'clock. We're doing Zinger Stock Trivia. We're going to do a week in review news quiz, a Wall Street news quiz. Wall Street / stock market focused news quiz. See who's been paying attention this week to the news. That'll be at 3 o'clock at the close. I will not be on the at the close show today. I have to hop. I got to get out of here for a flight. I have a wedding this weekend. So Mitch and Joel will be on at 3:30. And Brad Weber is back. Brad has, I don't know if I'm allowed to say, I guess I probably am allowed to say it. But Brad has recovered from COVID. And we are very excited to have Brad Weber back at 5 o'clock tonight. Technically Options. If you don't watch this show, highly recommend it. 5 p.m. Eastern Time every Friday. So very excited to have back tonight. Very excited to have Brad back tonight at 5 o'clock. I'm not in the wedding. No, this is just a college friend. But I'll be in upstate New York for the weekend. That being said, I will wrap it up. Reminder, the link to the Saturday event tomorrow, Saturday, right? The link is in the description of this video on YouTube. Just go to premarketprep.com, guys. Premarketprep.com. That's where to find it. Drop me a like. How many likes are we at before I hop off? Are we at like 300 or 400? 316. Let's get to like 350. Please remember, all the information from our show is meant to be used as informational purposes, not for investing or trading advice. And yeah, smash the like. Thanks to Peter. Thanks to Tommy. Thanks to all of you. You know what? Don't just hit the like. If you haven't already, guys, subscribe. Go ahead and subscribe to our channel. That would make my life a little better. I'm making sure that the other guys here are good to go, which it looks like they are. So this stream will end, and I'll redirect you to live trading with Mitch and Ryan and Junaid. And if they don't start on time, that's their problem. Everyone, have a good rest of your morning. Good luck at the open. Stay green. Stay filled. And any other housekeeping items I want to say? Nope. Pro.benzinga.com, free 2-week trial. Any questions, comments, concerns, email us. PreMarket@benzinga.com or shows@benzinga.com. That works too. Catch you guys later.